again, the single market analysis is truly dead in my opinion. You have to look at multiple markets. You can't simply just draw and say, here's a range, sell the top, buy the bottom. It doesn't work that way, guys. It simply doesn't. You can see that one market will always be a leading indicator for another market. So if you're watching analysis that's looking at a single chart and drawing ranges in, be very, very careful with that, because 9 times out of 10, they're going the wrong way. Now, when we look at the Euro-US currency pair, we've got room to extend. We're getting a little bit oversold, but surprisingly, we're not getting any significant. We're not really getting a significant bounce. Now, again, when I talk about this, the 18-day being challenged, we go up, and then you can see we aggressively go down. These candles come back up and they bang against this former support, now turned resistance, and then ultimately it snaps and just breaks significantly lower. These retracements are not even getting to the 18-day predicted moving average or the 8-day the last couple of days. So key levels: 135.34, 135.14, 133.11. 133.11, we're likely in an aggressive rally. That's probably where we're going to see the sellers come back in. If not, then we look to the 134 level. If that fails, 135.34, pretty sure that's going to contain any rally in the euro. I would certainly be targeting 129 before I would be targeting 135 at this particular case. US Swiss franc, basically the same trade. It's made up of Euro US and Euro Swiss franc. It's a US Swiss franc synthetic currency pair. So it could be a tricky one, but our key level is 91.06. I would strongly recommend buying down into this particular level. We've closed the week at 93.14. Nice move here, but you can see up, if we're talking about actual ranges and how to identify a range, then we look much longer than a 1 week. You can see that we have this range. The top of this range would be up around this 93 level, and the bottom, that's not a very good, that's a makeshift line, sorry. Let me draw this back in. We can see this down here around the just around the 86 level. So this is how you would properly identify a range over a longer period of time. This goes back to the mid-September to end of November. That's a range, and the range here comes in around 93, that last candle we have up here. So if we can get above 93, US Swiss franc really may have some legs to move back much higher. New Zealand US, basically the same trade as the Aussie US. We're getting oversold here. This is also a high yielder. If I were going long between Australia US and New Zealand US, I prefer New Zealand US for a number of different reasons. But again, going long here, counter trend, very dangerous. And if you are, make sure you're getting your profit out. 76.46. Key level 75.01, 74.10. These are your resistance points up top. You sell into those areas. We've closed at 73.93, so that pretty much negates 74.10. Your next area is going to be up around 75.01. Shorts, pretty decent play up there. Stops have to be above 76.46. You do not want to get prematurely knocked out of this, a very volatile, choppy market. US CAD, one of my favorites with myself and my direct clients. I've been recommending to buy this for weeks. You can see again what's happening here. The candles moving up above the vantage point, predicted moving average, the 3-day crossing over the 8, the 18, we get a break. We break higher, and then we come back and we start retracing the actual breakout point. So when one of my clients or somebody on Trader Planet says, well, I missed this trade, well, remember, it's not just going to go straight up. There's going to be a period of choppiness, much like what we're seeing right now in light sweet crude oil, and then you're going to get a break. May take a couple of days, may take a week, but it's likely to happen. So you position yourself. Myself, my clients, a lot of us, we were going long around the 99.50 level, getting ready for this break back up. As the predicted MACD and the predicted TSI started to break higher, you can see the market took off from the 101 level all the way up to above 105. Fantastic trade. So if you're looking at trading less, this type of trading, a medium-term perspective, and positioning yourself can really pay some decent dividends. Key levels now, 102.94, 103.88, and 104.66 with a close of 104.84. 103.88 on a corrective move on the equities, corrective move on some of the other commodities. This is your buy area between 103.88 and 102.94. That's a fairly tight range to look to get into longs, only about 80 pips. So if we get a move back down to that level, take advantage of that, and I would definitely target this upper range in this 106 area. That there's a very strong possibility that we're going to get back up there. Looking at the dollar yen, as I've talked about in the yen currency futures, they're showing weakness. Now, I do have some support in the 77.70 area, but we've just got to get this thing going here. Our predicted MACD, our predicted TSI, trying to cross that trigger, and it's a slow moving. It's definitely slow moving, but everything here looks quite good. If I look at the long-term crossover, you can see the long-term crossover has not completed, which is most certainly a concern. The medium-term crossover, the predicted short, medium, and long-term differences suggest a trending move is coming. So again, it's going to be repetitive what I'm saying, but remember, the US, Europe, emerging markets. Emerging markets, this will hurt the yen if the emerging markets start to get into trouble. So again, this looks like from a medium to longer term perspective, could be a very, very, very good trade to start building long positions. So with that said, this is the Forex Weekly Outlook for the week of November the 28th, 2011. And again, my name is Greg Furman, market analyst